Good morning, afternoon, and evening, traders. Welcome to February of 2021 already. We've already made it through January. It feels like I just blinked and all of a sudden the month is gone. I hope you all had a fantastic month of January and you're getting ready to rock and roll going into the new month. Before we get going, we always want to double check what's going on in the month ahead so that we're not taken by surprise by anything. So first up, looking at the holidays going on into the month of February, the only one that we've got to worry about is President's Day. That's going to be on Monday, February 15. That'll be the only day that the markets will be closed, at least as far as the bank holidays go. Now, when we're looking at news, we have a lot of news announcements. Not a lot, but we have some pretty big ones that we're going to need to keep our eyes on. As far as the large news announcements for the month of February, we have ISM Manufacturing PMI on February 1. On February 5th at 8:30, we have the average hourly earnings, the non-farm employment change, and the unemployment rate. Then there's a big span of nothing. There's a whole lot of non-big news going on in the middle there. And then as we go into February 17, we have another batch of large news with the core retail sales, and the FOMC meeting minutes. But that's really about it. February doesn't have a huge amount of large news going on. If we narrow it down to just the medium announcements, it fills it in a little bit more with ADP non-farm employment change and stuff on February 3rd. But again, there's still some pretty big spans of time without any big news in it. But at least the medium ones fill in the middle. We've got a bit going on there. Aside from that, though, there's not a whole lot else going on from the news calendar side of things either. So right with all of the stuff out of the way, we can start jumping into some charts with the month ahead going into February. And looking at February overall, starting off with the Nasdaq, we've got some pullback. Finally, January is shaping up to be kind of an interesting overall month. One of the big things that I really like paying attention to, especially for a January, is the January effect. Does it close bullish or does it close bearish? Because when January closes bullish, that typically, with a very high degree of probability, like 70+% of the time, means that the rest of the year will be a bullish year. That doesn't mean that there won't be bearish months inside of there, but that typically means that the year is going to be bullish. If we look at the beginning of where January started, so if we go back to the beginning of the year, that was right here. That was the opening price. And you'll notice that it did technically close bullish, I guess. It was a little bit sketchy, but it did close bullish. Buyers bought the defense on the open, and they were able to close it bullish. I mean, props to them, I guess. They got it to close up on the month, but is this going to be enough to allow the rest of the year to follow through with its bullish intent? That's going to be a different question. That's tough. That's barely a positive month, especially when the last 3 days gave most of it back. So it's a little bit weird going into the Nasdaq and the indexes as a whole. We gave back a lot of it, but it still did technically close bullish. The next major zone of support underneath on the Nasdaq is going to be hovering in the 12,730s, all the way down towards 12,534. Notably, there are also some unfilled gaps that are waiting to get filled in, and typically, if you're going to have a gap fill run, it's usually going to run them all. So if that's the case, it would push the market down towards 12,000, which is a very psychologically worthy level of interest to try to bounce the market back off of. That may mean in the nearer term, this is starting to shift a little bit more towards the bear side, but the bulls still have control. Just because we have 3 really strong bear moves to the down doesn't mean that the bears have all of a sudden taken over and the bulls are giving up. Look at this trend to the upside, right? I can't imagine buyers are going to be too shaken up by a little bit of a pullback. If anything, they're going to be looking to potentially buy on the dip. And what better place to get a wash down all the way to 12K before you can bounce it right back up? Looking at the S&P, we have kind of a similar situation. The gaps aren't as clustered together, which would make it a little bit nicer. The one big thing here is if we zoom out on the S&P, you can see there's a ton of gaps all the way down. If we compare that to the Nasdaq, when we zoom way out, you can see that there are far less. There's a few of them up here, and then there's a nice chunk of them down here if it's going to really pull back all the way down to those 6,000s. That'd be a little scary on the Nasdaq. But the S&P has them, I mean, they're evenly spaced all the way down. So there's not really a potential for the market to get one good flush and fill them all. If anything, it might be a quick little dip to bounce off of support around those 3,500s. That would fill in that gap around that zone as well. That'd be a really nice intermediary zone of support. Previous double top swing highs acting as support. You've got an L2 support level coming in there. Everything stacking up as a zone of interest around that 35 to 3,600 area. If the market starts breaking down, though, then you've got that flush potential down to like 3,100 to fill in both of those gaps. Get that move done, and then maybe they want to bounce back from there. The question, though, is if that does happen and it goes down, if it starts getting too close to this becomes a real objective where the market may want to slide down a little bit further. And you can see the domino effect. If it gets a little closer to that one, then it's going to want to fill that. If it gets close to that, it's going to want to fill that. So this can very quickly start running away to the downside if the buyers don't pick the slack up and really start ramping this thing back higher. Over on gold, we have still kind of a sideways consolidated market. It did have a really nice rejection off of the 1940s that rolled over, and now it's looking like, well, we haven't broken a new low. If sellers are going to come back in, they'll likely be defending that zone again. It would make sense. Now, as far as a falling resistance, we do have the shallower resistance coming across the top. You could also draw it a lot more aggressively, which kind of gives you a viewpoint of interest because they did gap above it and then immediately hacked right underneath it. But when it came back, it did act as resistance. So this is a provable line. And seeing this failure here, that's a bit of a nerve wrack for buyers who are trying to maybe buy the low here and get it to roll up. That is not the follow through that they wanted to see. Buyers want to see a big bull bar standing proud to get this thing to ramp up. That was a complete failure. So with the bulls kind of falling flat on their face there, if this starts sliding through the lows, they do have another level of support kind of coming along with it to maybe prop things up a bit. But it's a relatively new level, and that newer level might not be strong enough to hold things before seeing it slide back down towards the 1760s. Over on crude oil, we can see that the market is super sideways. It's not really pulling back, it's just going sideways. And that's actually a very strong sign of bullishness. When the market's not pulling back, but rather just kind of going sideways, coming back to a level of support, the last time we saw that was over here, and you can see the aggressive amount of bullishness that came out of that. That ramped the market through 50. That was that break above 50 all the way to almost 54. So given that we're seeing a similar situation, we have another ramp up, and again, the market's going sideways. This is a good sign that if we can get a small little trap, especially buyers buying into a nice dip into L1 back to that $50 mark, and then reject it right back up, it's off to the races again. It's the same thing that happened over there. We had a big bear indication. It looked like the sellers were going to dump it, and the buyers just ripped their faces off, and it was off to the races. Kind of looking for a similar situation for a rinse and repeat on crude oil to start popping back up. If buyers want to ramp this thing back higher, we're starting to get into those gap fills that really need to happen into the 60s to 70s. That whole zone is waiting there to get filled in. And if it's going to want to see a nice ramp, you can very easily see a quick little flush through that could get that job done and get all of those filled. There is an obvious caveat here. There's a ton of gaps on the bottom side. And, well, the last time crude oil had that, it went down to negative $40. So this is a little bit of a concern, obviously, having all of those open gaps, especially considering that some of those open gaps dip as low as underneath $15. That is a little bit of a concern. So if it does start dipping lower and the buyers lose their grip, there's a whole lot of open space for this to fall apart. But if we are going to get a rally through the top, that's a really nice objective into the 60s to 70s. Taking a look at the euro next, we've got a nice ascending wedge working its way up with an attempt to break through that ascending wedge and find a bit of support. We are finding that support in those zones of interest, and realistically the first one didn't really do much, but the secondary is holding pretty nicely, and that is also lining up very well with previous levels of structural support. So we have an L2 and we have previous structural support, and this is even more impressive because if we line this up, if we put a line, let me get rid of this real quick. Actually, let me just do it this way to save us a little bit of a hassle. Let me just load the template up for an L2 and call it a day. And then we can look at getting, come here, get that over like this. And then we can also take a look at this from another perspective of if we are going to be pulling back a little bit further. This was an aggressive top, and a lot of times if that's going to be the scenario, you'll see this kind of two-legged move lower. But the big thing that sellers needed to do was break down, because if we look at this zone and we mark this up as an area of interest, right, these previous major swings, when the market came time to break down, it failed. And when it came back, it acted as support. That would suggest that sellers were quick to jump ship. They got out of break even when it came back, and they didn't look backward. They got out and they were happy. And the ones who didn't get out, they were just given another chance to possibly get out of that short position. So although sellers are looking for a drive lower, and they could be looking for a move down to the 1.19, there's a lot of potential here for buyers to really rip this thing to the upside. A nice little inside bull bar, tried to break out of it, didn't really prove much. This might just be a small little wedge waiting for a breakout up or down. Either way, if it does go down, we've got the downside objectives to the 1.19s, but seeing all the failures here, if the buyers do want to take it back up, at least to where the sellers entered in at the 1.225, if not back up to the highs again. Taking a look at Bitcoin next on the crypto side of things, and we are seeing a descending wedge. Buyers really tried to get that breakout move a few days ago on the 29th, and it did not work well. It was a bit of a failure, and by a bit, I mean a complete and total failure. It closed all the way back underneath the wedge top. That could mean that the wedge simply widened out, and now we've got more of a flag-looking formation than anything else. But given that it closed all the way back down here and then closed underneath it again, and now we're seeing rejection, I think that's good enough proof that buyers kind of lost their ground here a little bit. That doesn't mean that they're out of the way, but what it could mean is given the lack of tests of support down here, we've only had one and then a higher low, they may be looking for one more move to finish off that three press wedge right back into that L2, and then it's off to the races. This is the first time the sellers have been able to even get below the moving average, so very unlikely that they're going to be able to sustain much here yet. But realistically, it wouldn't be a surprise to see a bit more of a pullback. Buyers will be more than happy to look for that dip underneath 30,000, especially when you start getting closer to that three press wedge as a zone of support. And then finally over on Ethereum with a strong rally to the upside and breaking aggressively higher, also forming an ascending wedge in this case, a little bit of a different view from Bitcoin. This ascending wedge is showing a bit of a hard time at the top. Not really much of a surprise. We're running into 1400. The big objective to the upside that we've been talking about in the chat room is 1440. It pinged off of that multiple times to the tick. It's kind of gross how well that worked out, and it continues to be a bit of a short-term high. It's not a big surprise. Buyers who were buying in before the breakout move, where was that? That was in the 600s, or if they were late to the party, 700. Well, what do you think 1400 is? 1400 is all of the people doubling their money. Why do you think there's so much profit taking going on here? We've got people who just had 100% ROI, and it keeps bouncing around there after big pullbacks. They're going to be a little bit quicker to get out if it's not going to break through this. And that causes a domino effect where the pullback becomes a bit deeper. And if that does end up being the case, a deeper pullback would line up almost perfectly with L2 and a retest of the massive psychological level of 1,000. Now, this $1,000 level, we were talking about how this might be the last time we see 1,000, but given the bulls' failure to break above the 1400s, ricocheting off those 1440s, if they can't step up to the plate and hit the gas pedal soon, then we might revisit the thousands, or at least come a little bit closer. I still think buyers are going to be heavily defensive there. That's a major level. But realistically, I think buyers are still just looking for continuation, and an upside objective into the 1600s or potentially a lot further are still in store for 2021. Shifting over to the stock world for a little bit here, taking a look at ALDX, that's Alpha Lima Delta X-Ray. Nice little descending wedge pullback into an L2 and holding for a very nice zone. Now, not only is it a descending wedge into an L2, that by itself is actually fairly nice. But along with that, if we look at what's happening here, buyers attempted to, and so far, successfully at least initially, broke through the top of that previous swing. And even if we look at some of the previous major levels of resistance, it's very obvious that nothing really stood in the way. So the only thing that's realistically happening here is earlier buyers who are potentially stuck, or maybe they bought way up here thinking that it was going to go up and they got dumpstered. If they've been holding, they've finally been given a chance to get out at break even. And that appears as though what's happened, at least initially. If this is going to be a continuation breakout to the upside, we should see support regain back into the L2, maybe a higher low transition, and then rotate right back up off of, even better, the $10 mark. So a double bottom off of $10, rotating back up, trying to get to 15, and potentially even challenge up into the 17s. Maybe even into the 20s. So a lot of potential here depending on how ALDX wants to get its movement going on. Right now we still have that descending wedge and it's still waiting for just a little bit more of a pullback yet. Next up on the list, we've got a big player, Microsoft. That's MSFT, Mike Sandy Foxtrot Tango. I think everybody pretty much knows that ticker symbol, but we do have some really good continuation up, and the big thing that's standing up here is not only, obviously, the gargantuan bull trend to the upside, but the fact that we broke out above these major highs after the buyers were so aggressive. When we were holding that $200 level, it was barely allowing any pullbacks. I mean, maybe 25%, barely 30 if they're lucky. So with that amount of aggression holding it up and now breaking higher again, it's very likely that buyers will ramp up their aggression and look for a breakout pullback continuation to at least target that kind of psychological $250 mark. So it's looking pretty good. But one thing that is a big it's a big part of this is that if the buyers are going to hold here, it's a retest of the wedge, everything's lining up, but they've got to break back through this line in the sand. If it falls short and fails, doesn't pull back much, that's fine. But if it starts keeling over, that would be a really big problem that could potentially get in the way of the bulls ramping this back up again. And then the last one on the stock list, FUBO, that's Foxtrot Uniform Bravo Oscar. This one is getting hit a lot with social media hype. A lot of hype wrapping around this one. Kind of the same thing that we saw with AMC last month, although that one got caught up with a little bit of craziness with Robinhood and everything else. I'm not about to get into all that, but this is one that is also catching a lot of attention. And the way that it's forming right now has a very nice wedge going on from the highs all the way up above 60 to the wedge lows sub 23. So you can see this is by no means a small moving stock. This thing's got a lot of volatility to it. Right now, it's in the middle. Realistically, buyers, it makes a lot more sense that they're going to be hanging out on the cheaper end of this. Knowing that the high is in the 60s, I would much rather be a buyer at around the 30s to 35s, buying it at kind of a half off. Trying to get it a little bit underneath the wedge, assuming that the first break of the wedge will be a failure, and then looking for it to rotate back up towards the highs and re-challenge the $60+ mark. It's looking really good. It's just stuck in the middle of the wedge right now. It needs a little bit more of a pullback to solidify things and get things going right back up again. All right, well, that's going to do it for the month of February. I hope you have a fantastic month ahead. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Thanks for watching, and we will see you all next month.